is the company that dictates how money flows around the world. For nearly 8 decades, Visa has dominated the market, virtually unchallenged. Top dogs in finance used to be big banks with trillion-dollar balance sheets. No longer. Earlier this month, Visa, a humble payments processor, became the world's most valuable financial service company. In 2023, Visa processed an impressive $14.8 trillion in total transaction volume over the previous 12 months. By ruthlessly crushing its competition, Visa has managed to become the king of credit card. In 1928, Amadeo Giannini is the most powerful banker on the West Coast. His bank has recently just achieved an impossible milestone, having $1 billion worth of assets. Bank of America. On the East Coast, you have banks like JP Morgan, Citibank, and Chase Bank in close competition. But on the West Coast, Bank of America was the dominant force in a growing market, thanks partly to the unprecedented immigration through California. Giannini now has the money and power. It's a stark contrast to the humble beginning from which he clawed his way to the top. Born into an Italian immigrant family, Amadeo Giannini managed to build a successful career as a grocery merchant. He knows his success is meaningless unless he can also help out his own people, the Italian immigrants. He was the son of humble origin of this first wave of immigration. Giannini's uniqueness was to be able to understand that Italian immigrants were discriminated against and despised. He therefore stood by them to grow both the Italian-American community and all of California. He was one of the first bankers to lend money to middle class and immigrants. Before long, Giannini grasped a pivotal truth. Launching his own bank would allow him to lend even more money to his people with greater impact. In 1904, he established the Bank of Italy in San Francisco. His hard work and generosity towards the working class people became the cornerstone of his burgeoning success. His bank was a completely different bank from any other, based on absolute generosity, but above all, on a new vision developed by staying in touch with ordinary people. Giannini seized the perfect moment as California surged into its most unprecedented growth era. As California's economy exploded, Giannini's bank becomes a huge success. By the late 1920s, his bank boasts over $1 billion in assets, and through a series of mergers, it acquired a new name, Bank of America. From the very beginning, Giannini had a singular vision. He wanted Bank of America to become a financial supermarket that offers all kinds of service to the masses. This meant not just traditional banking service like saving and checking account, but also extending into other areas like mortgage lending, auto loans, insurance, and investment service. By offering loans to the burgeoning middle-class consumers, the bank's business flourished exponentially. In the following decades, Bank of America's assets soared to over $5 billion, becoming the largest bank in the world. In 1954, clocked by Clark Bass is elected president of Bank of America. Long before that moment, Bass has been a dedicated manager, working side by side with Giannini to forge the empire of Bank of America. In the mid-1950s, the bank was one of the largest in the United States, expanding its service and branches nationwide. So as the leader of Bank of America, Clark Bass was a very pragmatic and forward-thinking individual. For Bass, the shadow of his predecessors, especially Giannini, loomed large, and his determined to create a legacy to call his own. Tech-savvy, Bass began to explore the possibility of a new type of business as the country witnesses one of its biggest economic boom. The 1950s in the United States is a decade of post-war prosperity. It's a time when the middle class flourished, enjoying higher earnings and increased spending power thanks to rising wage and widespread employment. Consumerism is on the rise, fueled by a booming housing market and the widespread availability of new consumer goods like automobiles and household appliances. Around this time, we saw a huge spike of consumer credit. What does that mean? Customers could buy goods and services without having to pay in advance. Gas station is real gasoline cars, allowing customers to fill up on credit, and ally offer their cars to facilitate travel on credit while fostering loyalty. General stores like Sears also issue their cards for purchase in their retail store. These stock cards employ customers to buy goods on credit. As the new chief executive at Bank of America, Clark Bass aims to build a new business for the bank, and one of his management has the exact plan to realize this vision. Joseph Williams was born in Newark, New Jersey, attended the University of Pennsylvania, and served as an infantry officer in the U.S. Army during the World War II. After the war, Williams looked for an industry that's growing, and he soon became an employee at the Bank of America. As he witnessed the rise of a various special purpose card, Williams see a need to create a single general purpose card to replace all the value of a single card that could replace all the other forms of credit would be so instantly obvious. His words among its growing core of middle management. Prior to the introduction of credit cards, recurring a personal loan required meeting with a loan officer. This method was very time-consuming, but Williams has a bold idea. Envisions a card that contains a $300 credit and freely given to every Bank of America's customer. The idea of a 1-month grace period of time during which customer could pay off their balance without facing interest rates emerged from that research, as is the idea of charging 18% a year on credit card loans, a figure that would be seemingly set in stone for the next 30 years. Even as every other manner of interest rate fluctuated wildly, even from credit card works, Bank of America will be able to charge high interest rates, and it has the potential to become a highly profitable business, and it will also catapult Williams to the pinnacle of the corporate later at Bank of America. In September 1958, Bank of America initiated what they call Fresno Drop. It's an unprecedented mass mailing campaign. This was one of the craziest events in banking. He picked a city in California, Fresno, with 250,000 people, and gave each of them a credit card called BankAmericard. Approximately 60,000 unsolicited Bank of America credit cards find their way into nearly every household in the city. This audacious move essentially provides a line of credit without prior application or approvals for the very first time in the history of banking. The card comes with a $300 credit limit, a 1-month grace period, and an 18% annual interest rate. The card for every need, usable for various purchases at multiple merchants. William and his group saw that a credit card could be used in two ways. It could be used either as a device offering convenience, as a dinner club credit, or as a device generating an instant personal loan. With credit cards seemingly materializing from thin air, customers are easier to spend. This what appears to be free money. During the first few weeks, the project seemed like a success. Bank of America immediately dropped more credit cards throughout the city in California, aiming to dominate the market before competitors can catch up. Before launching Bank of America, the bank's typical customer had a delinquency rate of about 4%. Williams used that as an assumption for the new credit card holder. But what he doesn't know is that the actual delinquency rate skyrockets to a staggering 20%, with nearly 1 in 5 customers failing to repay their credit card loans by month's end. Customers and merchants quickly learned to exploit the system, forging signatures and reporting fake transactions. In a short span, Bank of America found itself hemorrhaging $8.8 million in an amount scandalous for any bank in the late 1950s. As a result, Joseph Williams is fired. Williams was a tragic figure. He has the right idea, but his execution didn't match up. The initial launch of Bank of America was a disaster. To recoup loss, the bank began retracting cards from delinquent customers and enlist collection agencies to pursue outstanding debts and interest. Despite Fresno Drop's marketing fiasco, it inadvertently proved a compelling thesis that the majority of people do desire a credit card. A year after launch, BankAmericard slowly begins to recover its loss, transforming into a profitable enterprise. But the bank soon discovered a revolutionary new way to make money from the credit card. By the mid-1960s, BankAmericard continued to generate profits. It began to catch the attention of other banks. To many of its competitors, they realized that they are too late to the game because they don't have the resources to build their own credit card issuing and payment processing system. And after the retirement of Clark Bass, the new man at the helm, Rudolph Peterson, is determined to take advantage of this situation. He quickly sees this as an opportunity for a new type of business income. He realized that Bank of America could let other banks issue their own credit cards by allowing them to use Bank of America's well-built infrastructure for a fee. Licensing means letting other banks use Bank of America's system. In the early 1960s, Bank of America begins to allow licensing for other banks to issue cards under the BankAmericard program. This means that this bank can issue credit cards using the BankAmericard name and, more importantly, let Bank of America handle the transactions, while this bank focused on providing the loans. This licensing model proved to be resounding success. Within a few years, BankAmericard evolved into one of the most profitable entities in the industry. But as more banks adopt and issue their credit using BankAmericard, a different kind of problem comes to the surface. Following BankAmericard's launch and explosive popularity, criminals quickly identify a unique opportunity. Instead of robbing the bank outright, criminals break into warehouses and steal BankAmericard's cards that are not just sent to customers. At the time, the infrastructure for tracking and canceling individual cards was not very efficient as it is now today. The stolen cards were unembossed, meaning that they had not been assigned to specific account holders yet. These criminals then attempt to sell the stolen cards back to the bank, putting the bank in a difficult position. Credit card theft is a new type of crime, but the bank fears that the unauthorized use of stolen credit cards would cost them more than paying the ransom, so they decide to repurchase the cards from the criminals to prevent further misuse. Yes, fraud is merely a tip of the iceberg in the myriad of issues faced by Bank of America by its licensing banks, because the vast majority of credit card transactions involve two separate banks. With every transaction, the merchant's bank would reimburse the store for every credit card sale it made. Then merchants bank would send out the sale draft to the member bank around the country whose customer has made the purchase. The customer bank in turn would reimburse the merchant's bank, take a fractional amount of the transaction for itself, the interchange fee. Finally, the customer bank would bill the customer for the item. When the customer paid, the transaction was complete. As transactions continued to surge, the system near a critical breaking point. If Bank of America can't find an efficient way to scale, the entire business could scramble. To address this crisis, a man from an unlikely place stepped forward with a solution that could change everything. The man most capable of solving BankAmericard's problem hails from the most improbable origin imaginable out of the Mormon state of America. Growing up on a farm, Dee Hock's childhood is marked by solitude and the love of mature. As a Mormon, Dee Hock developed a lifelong habit of early morning and hard work, but he quickly rebelled against his faith and his school. Early on, first never felt I belong in this family. My father is very tall and physically oriented, and I was somewhat introverted and loved to be alone and wander outside in the field, and I was not close to my father. We were constantly confronting one another. He was of the school that says there's only one way, one right way to do everything, and of course, that was his way, and I always resented him. He frequently got into trouble, despising class and preferring the solitude of nature and self-directed studies. Dee Hock did not like following rules at all. He's the type that would change the world around him rather than changing himself. As a result, after college, Dee Hock struggled to hold on to jobs. Despite being a high performer, Dee Hock despite office structure and often clashes with his superiors, leading to his terminations. By the early 1960s, with a pregnant wife, Hock faced the humbling reality of seeking unemployment support from the government. I had no money to the bank, no friends, no family, just my wife here and I, and our two children with the other one on the way. I was out of work and had no idea what to do. I was having about a depression. The first thing that occurred to us, we were without income, and I had these three people to support that I should go and apply for unemployment. So I drove to the employment office across the street from it. There was a line of people waiting to get in because it was a time of my recession, and I simply could not get out of the car. I sat there for well over an hour and I have trying to persuade myself that I was entitled for employment compensation, but I just couldn't do it. I felt that it was contrary to everything I believe in and the work ethic I had acquired. And I had a feeling that if I ever got out of the car and got in that line, something inside me would simply die. After an hour and a half of treatment, I had to ride home and explain to a 7-month pregnant wife that I couldn't do it. Dee Hock is determined. He will do whatever it takes to success and to never let this happen again. It's pretty easy sometimes to feel beaten when you are faced with all those issues and all those problems, and they all hit you all the same time. That doesn't mean give up. He eventually lands an assistant job at the National Bank of Commerce. This time, to provide for his family, he is willing to take on any work necessary. Soon he is asked to perform a task that yet again go against his beliefs is to help launch a credit card business for his bank. Dee Hock was a very frugal guy, and he did not like the idea of credit cards at all. But Dee Hock threw himself into the job. It means to excel. By 1967, through licensing from Bank of America, the National Bank of Commerce successfully launches its credit card program. The business took off immediately, and Dee Hock quickly earned a promotion to head the credit card operation. By the late 1960s, the credit card industry exploded, fueled by American economic prosperity as a first mover. Bank of America's BankAmericard becomes the leading credit card. But as the business grows, a flaw in the system becomes apparent. Many people take advantage as first mover. It's the first to scale. The first to scale, generally speaking, tends to get the attention from the press, tends to get privileged access to capital, tends to get privileged access to talent. While Bank of America has managed to reduce fraud, the licensing system makes fraud prevention increasingly difficult. In the 60s, Bank of America's BankAmericard program let different banks give out their cards. This caused a lot of issues with credit card theft. Back then, technology wasn't advanced enough for a wide-scale fraud detection, so this whole setup makes it really tough to deal with fraud issues popping up everywhere. If BankAmericard doesn't address this issue, competitors could exploit it with better systems. To prevent that, Bank of America needs someone to design a system that ensures its credit card's continued dominance. As a licensee of Bank of America, National Bank of Commerce has a vested interest in the system's success. Dee Hock has recently been promoted to the head of the credit card division, and he immediately proposed forming a committee comprised of all member banks to decisively tackle the problem. He is then appointed as the committee's chairman. At the head of a committee, Hock is armed with a mission to design a revolutionary system, unlike anything corporate America has ever seen. It's an opportunity for Hock to finally do things his way. He starts by reflecting on his own childhood and the lesson learned from nature. I saw such a clear distinction even then between nature and human being. Nature never seemed to have this problem. There was no principal blackbird in a flock. There was no president tree in the forest, and that everything was competition and competition in nature. The two truths seem constantly blended and coexisting, but when you move people into an organization of any kind, the division started. It's either this or that. It's either true, it's false. It's right or it's wrong. It's either good or it's bad. Hock's ideas are profound. His evidence as self-organizing, self-functioning, and self-governing distributed system. While he was pretty much envisioning a distributed network system that has no central governing figure, a decentralized network, and each of the nodes must agree to follow to set of principles and algorithms and as how the system will function. Ultimately, to fully unleash the power of his design, Dee Hock proposed forming a new organization, independent from Bank of America. He called it National BankAmericard. Remember, credit card networks are merely payment systems. It's the bank that issues credit cards, so NBI was a payment network that by itself does not issue any debt. While his ideas are innovative, Hock remains unsure whether other member banks will join, especially with his biggest partner, Bank of America. It was tough in the beginning. These people are being asked to put their reputation on the line and join something that they are totally unfamiliar with. I understand their hesitation. With the support of Bank of America, Dee Hock becomes president of this new organization. But what Hock doesn't know is that Bank of America is also secretly working with American Express to build a new system, potentially undermining Hock's entire effort. For Dee Hock, in order for the Bank for America system to succeed, he needs to make sure the payment network is as secure as possible. In the digital age, privacy threats are ever present as our life more increasingly online. This will not VNP kicks in. Not VNP help you protect your data by encrypting it, keeping it safe from potential data miners or breaches when you are surfing on the internet. It's fast, reliable, and easy to use. For someone who enjoys writing in coffee shops, NordVPN allows me to browse the internet without worrying about losing my data or getting hacked. Not only does NordVPN help secure your network, it also helps protect your privacy. NordVPN allows you to browse the internet anonymously, protecting your activities from prying eyes with its trusted network of over 500 global servers. One of most used features is the ability to change location to anywhere. While visiting China before, I was able to watch my favorite TV show, Succession, using NordVPN. Just simply trace our country. You can click back, sit, and relax while watching the show you wanted to watch. To get NordVPN, be sure to use my link, nordvpn.com, finance and receive for extra months or for free. Afraid that the decentralized system proposed by Dee Hock may fail, Bank of America secretly collaborates with American Express to build a nationwide credit card authorization system controlled solely by them. This revelation comes as a shock to Hock, especially since Bank of America is a key member of the National Bank of America. If Bank of America and American Express succeed with their new system, it could render Hock's efforts a waste of time and energy. It's like building two competing highways. It's not good for society and a waste of resources. I feel completely betrayed. It's work contrary to the spirit of the efforts to form NBI, and I could materially affect its success. Bank of America had agreed to join the new organization I designed, but I didn't know at all that it could also working with American Express to undermine my efforts. In response to the challenge, however, the NBI board made a bold decision to break away from the industry-wide effort and build their own proprietary competitive system for electronic authorization and transaction clearance, known as the Bank Authorization System, a experimental-based one. Authorization is necessary to check whether a cardholder's credit card holds sufficient funds and is approved to purchase from a merchant. But what Hock doesn't realize is that the real threat is not American Express. A new credit system is on the rise and is gunning for his business. The mid-1970s present significant economic challenge marked by the oil crisis, high inflation, and economic stagnation, also known as stagflation. In this turbulent period, monetary policy struggled to find a balance between inflation control and economic growth. But amidst the difficulties, the credit card industry experienced rapid growth and evolution. This area paves the way for widespread credit card adoption, shaping modern consumer finance and banking practice. The introduction of Bay 1 revolutionized transaction processing, propelling NBI to the forefront of the financial service industry. Thanks partly to one man, Dee Hock, the business model really is like a money printing machine. It's a money every time someone uses the network for payments, becoming more popular as more people and shops use it. Due to network effects, and on top of that, it's highly scalable because it can easily handle more payment without much effort. But success breeds competition, and a challenger arrives, ready to undo all of the Hock's achievements. Witnessing the success of NBI and its member banks, other banks in the industry realize the potential of forming their own credit card network. Mastercard, later known as Mastercard, emerged from a collaboration of regional banks called association administrate a unified, competitive force in the Brazilian credit card market. To challenge BankAmericard's dominance, Mastercard focused on expanding its network and increasing its acceptance both domestically and internationally. If Mastercard gains enough momentum, it has the potential to completely overtake BankAmericard as the leading card payment system. Desperate to protect his creation, Dee Hock makes a tough decision. He rolled out an anti-duality policy, prohibiting his member bank from adopting Mastercard. He hoped that this bylaw will prevent his member bank from adopting Mastercard, but he has no idea what is about to happen. Warden Bank of Little Rock, Arkansas, is a smaller member of NBI. In late 1971, the NBI board adopted the bylaw against duality for his member. Warden Bank promptly filed a lawsuit alleging antitrust violation and seeking an injunction to block the bylaw's implementation. The Warden Bank of Little Rock, Arkansas, has also become a member of Mastercard. They threatened to sue NBI if it adopted a proposed bylaw prohibiting duality. I flew to Little Rock to meet with the president and other senior officers of the Warden Bank in an effort to persuade them, but unfortunately, we could not agree. The Warden Bank promptly filed a lawsuit alleging violation of the antitrust laws and asking for an injunction to prevent enforcement of the bylaw. To make matters worse, Hart's decision to forbid its member banks from adopting Mastercard has an unexpected consequence. It gets personal during the Warden Bank lawsuit. Dee Hock also faced a lot of personal threats. He received a lot of abusive messages, even filed cross-slash on his office term, and he received threatening packages containing a vandalized book from his library. Each day, I had to rise and deal with countless problems. The business has to go on, and responsibility could not be so aside. I began to sigh into the expression, the dark, the small squares that aroused my ability to think or function nobly. In the end, Warden Bank wins the lawsuit, and Dee Hock is forced to leave his bank. And now, his member banks are free to issue both BankAmericard and Mastercard cards. Despite the legal challenge, NBI is about to enter one of its highest growing stage ever. Although the 1970s other chapel some decades from the United States, international travel and trade have risen sharply for the rest of the world, leading to explosive business opportunities for the use of credit card. By capitalizing on the shift towards a cashless economy and consumers' demand for convenience, BankAmericard has become the global leading payment system. But Dee Hock realized that to further simplify its international business, there needs to be a strong and powerful balance. By the mid-1970s, his firm decided to change the name from BankAmericard to Visa. To BankAmericard is headed for extinction, at least its name, starting sometime next year, according to National BankAmericard. The name of this credit card will be changed all over the world to Visa, a word expected to be universally acceptable. By the early 1980s, Despite facing insane competition, Visa has achieved significant market share of 60% by introducing products like Visa Traveler's Check and innovation security features like holograms on cards. Its billing soars to $59 billion. As a result, Visa is now one of the most powerful companies in finance. Dee Hock's thesis has been proven correct. He has built Visa into a thriving, decentralized organization. Believing his mission is fulfilled, and to further prove that Visa has a unique entity that can do well without him at the helm. He decides it's time to retire. Little does Hock know that within a mere decade, Visa will grow to become a monster, an industry power that will defy everything he stood for. The credit card industry is on the rise. By the early 1990s, it handled trillions in transactions, recognizing his lucrative opportunity. Many industry titans are eager to capitalize on the trend. One of them is Phil Purcell. Purcell was very interest-neutral from the very beginning. Even as a young man, he was already demonstrating his hustle, selling magazines and working at local dry cleaners on school days. He always understands business at a very practical level. While working at Sears, Purcell spearheads the launch of Discover. It's a credit card aimed at middle-class shoppers. By the early 1990s, Discover cards are worth $1 billion, positioning the card as a serious contender to Visa and Mastercard. Seeing the threats posed by Discover and others rising credit cards, Visa and Mastercard from an unlikely alliance together they implement policy designed to prevent member banks from adopting competitors' cards. It's a tactic that Visa Inc. has tried once before. Few Purcell see them as bullies and their actions as grossly unfair. He decides to join American Express in reporting Visa and Mastercard to regulators. Purcell hopes Visa and Mastercard will be punished with hefty fines and reputation to his company. The lawsuit filed by the Justice Department in Manhattan Federal Court alleged they limited consumer choice and retraced competition by controlling both associations through the same bank and banning member banks from offering competitors cards like American Express and Discover. The lawsuit is a huge blow to Visa's business. If they lose, they could potentially lose billions. Visa's troubles are far from over. Even as the antitrust lawsuit loomed, another major company also set its sights on taking Visa down. In the early 2000s, a group of retailers led by Walmart filed a class action lawsuit against Visa. They alleged Visa is using its market dominance to enforce excessive debit card fees and restrict merchants from accepting competitor cards. The lawsuit claimed this limits consumers' choice and steers competition. It's important to understand why Visa became such a monopoly. I think it's because of network effects, just like social network companies that came about later, such as Facebook. As more merchants and consumers adopt a payment network, it becomes more convenient and ubiquitous, drawing even more users. This cycle can lead to a dominant market position, potentially creating a monopoly-like status. Mounting legal battles forced Visa to pay billions in settlements to companies like American Express, Discover, and the retailers involved in the class action sales. Soon, despite being a virtual money printer. Visa comes dangerously close to running out of cash to pay. As far as Visa's management is concerned, there's only one way out. Huge demand for the Visa record-setting IPO sent the share surging Wednesday, even as the broader markets choked on credit fears again. The success of the largest U.S. IPO in history and the strong interest from both professional and individual investors turned Visa into a bright spot in an otherwise choppy stock market. Visa IPO in 2008 set the U.S. records, raising over $17 billion. Despite the booming financial crisis, investors love companies with a monopoly status. Visa's business model was not good, and investors were able to overlook the fact that it was constantly under litigation. From a decentralized payment network, Visa has become a dominating power in finance. In 2023, Visa has a revenue of $33 billion and a net income of $17 billion. Both increase steadily every year, with over $12.3 trillion in payment volumes going through Visa. It's undoubtedly the king of payment, while share of Visa hits an all-time high in today's session. Visa stock has been steadily on the rise since the company's last earnings report, which forecasted a resilient outlook on consumer spending. None of this would have been possible if not for the ingenuity of one man.